Hi, everyone. Welcome to another Wealthy podcast. Today we have a very special guest, Evan Cathcart. He's the sales director at Blue Earth. Hi, Evan. How are you?
Hi, Tiffy. Thanks for having me.
Thank you for joining us. So, Evan, you're a Melbourne expert, and that's why we have you here. We want to hear all about what's going on down in Melbourne. So, can you start by sharing a little bit of why would you choose to buy or invest in Melbourne?
Yeah, so it's really interesting. I've, just by way of background, I've been working in the project marketing space here in Melbourne for 15 years now, and we've seen some really interesting times over the years. Uh, in particular, at the moment, obviously with COVID-19, but we keep coming back to the fact that we've got really great and strong fundamentals around the property market here in Melbourne. One of the key drivers being population growth, which Victoria is the fastest growing state and has been for the past 10 years or so. We've had about 140,000 net population growth into Victoria over the past 3 or 4 years. So obviously population growth is a key driver behind demand for property and has really, driven our property market, over the past 10 years and beyond. So that's one component, which really is underpinning demand. And then from a supply perspective, we've seen supply really restricted over the past 4 or 5 years, which has been government-led, really. 2014, 2015, there was real concerns around, oversupply within the Melbourne property market. And back then we were seeing about 50,000 sales of new apartments in Victoria per annum. That's fallen steadily to a point where we've only had 12,000 or just over 12,000 new apartment sales in Melbourne in 2019. So the supply of new property has fallen, about fourfold, but the population growth has remained stable in Melbourne, which, has really underpinned the market. And I think will put us in really good stead, as we come out of the COVID-19 crisis.
Yeah, that's very interesting. And I've been reading a few articles on when the population of Melbourne is meant to surpass that of Sydney, and
Yeah,
we're not that far away, right?
that's right. Yeah, I think there's very varying reports, but they're saying within the next 10 to 15 years the Victorian population will be bigger than New South Wales. So that's obviously interesting. There's a whole range of drivers. I think from an economic perspective, Melbourne's performed really well. I think education is obviously another huge driver, which is attracting overseas migration from students, and then families of people studying here is another real factor as well.
Yeah, that sounds about right. Everything I've read, it's what you're saying. Now, when we talk about Melbourne, what are the particular hotspots that you like the most?
Yeah, so it's interesting, and it's basically what the team at Blue Earth look for from a site acquisition perspective is they're essentially and have for the past 25 years since Blue Earth was formed, have focused on what we call the donut. So it's essentially not the very middle of Melbourne being the CBD, but it's about 1 or 2 kilometres from the CBD out to about 15 kilometres. And the reason for that is we find in the CBD, the product is typically very much designed for, the Asian students, and it's a product that's a lot smaller. But there's also traditionally been an incredible volume of supply of new apartments within the city and surrounds, so the CBD, South Bank, Docklands. And when you look back over time, these areas have not performed well from a capital growth perspective. Contrary to that, you look in the sort of inner city fringe suburbs of Melbourne, and they're areas where people want to live. That's where your typical Anglo Australian wants to be. Close proximity to the CBD, but obviously village-like atmosphere and so forth. So that's been a driver for Blue Earth in terms of where they've looked, and it's for that reason that investors within Blue Earth projects have traditionally done really well. Some of the other drivers where we see good growth, not just in the long term, but in the short to medium term, is in suburbs that offer really good affordability, but are gentrifying quickly. So, the key indicators of gentrification is when you get the first one or two great coffee shops, when you've got good restaurants and bars where people are coming from out of town to eat and drink. That's a real, driver for gentrification. That's when you see white collar workers moving to town, and you see the demographics change really quickly. So, suburbs that we've focused on recently, we've had a huge success in a project in Footscray, which offered exactly that. It offered great affordability, but fantastic lifestyle and really good accessibility into Melbourne CBD. We've seen similar in other suburbs like Essendon, Brunswick, Collingwood, these sort of suburbs. And when you look back at the capital growth over recent years, these suburbs, even in a softening market in 2017, 2018, 2019, still actually had some really good growth. And it was actually apartments that outperformed houses in these markets as well. And that's driven by, affordability as the market softened.
Oh, that's completely new news to a lot of people, because we always assume that houses will perform better than apartments. So, and I think usually we've been covering this in the last few podcasts where we put everything in one bag when it comes to real estate, and it's not true, right? Like, it depends on each particular, let's say, whether we're talking Victoria, New South Wales, Melbourne, and how many kilometers away, and the affordability, the price range plays a key role. So, and can you expand a little bit more? Because we've received a few of these questions from clients on what it means, what you were just explaining when you're seeing the gentrification, what it means actually that you're basically going to be seeing the suburb change. Can you go into a little bit more detail on what that means?
Yeah, so the gentrification is really where you see, I suppose by definition, where you see a change in class within a suburb. So you move from a lower socioeconomic demographic to, a higher, more sophisticated community, and that's something that we've seen really quickly throughout some of Melbourne's, inner and city fringe suburbs. With that shift in demographics, you obviously have a shift in affordability for property. So people have more money, they have better jobs, they pay more rent, they pay more when it comes to buying property as well. So that the gentrification is really a driver behind rental growth, and we see that we see that right across the city fringe suburbs of Melbourne, and often there's a bit of a ripple effect. You see, one suburb boom, and then the next year, the next suburb is that next boom suburb, because people are chasing that affordability. So they're happy to move that next suburb out from the CBD.
Yeah, so sorry, you were just breaking off a little bit, but it was a minor thing, and this is live, so that's great, things that happen. And that's when at Wealthi we are advising our clients on which are great investment properties. We definitely are looking at population growth, investment in infrastructure, employment, and a lot of the suburbs that we look at are suburbs that we're already seeing them change, attracting more, let's say, people who are more qualified, willing to spend more money in the area, in the coffee shops, dining out, and they're going to be demanding nicer rentals, so willing to pay more for their rental, but also they will be paying more for the property price. And that's basically it. That's part of the strategy of how we search for the properties that have the most potential for growth. Now, in all of these, you've mentioned quite a few hotspots and areas you like, and can you deep dive a little bit more on the supply side and timings? Like, even for a few of your projects, maybe you choose one or two of the projects that you like the most from Blue Earth, and what it looks like around the area. What are we seeing coming to the area? Whether it's not a lot of supply coming our way, or like are your projects going to be completing this year, next year?
Yeah, and I might just come back to a question you asked earlier in relation to capital growth for houses versus apartments.
Yeah.
This is a common misconception in the market that you don't get the same level of capital growth out of apartments as you do houses. But we've seen over recent years that apartments have been performing as well or better than houses, and a lot of the time that's really driven by affordability. So a common trend that we look for in suburbs is what is the price differential between an apartment, a 2-bedroom apartment in a suburb, and the median house price. And that healthy price differential we find is about 150% or thereabouts. But what we're finding in Melbourne is we've had really strong price growth, particularly in houses over the past 10 years. Apartments hadn't tracked at the same rate, so now they've got some catching up to do. So there's some suburbs in Melbourne where the price gap is about 250% or so. And an example of that, we've got a great project coming up in Essendon, which is about 11 or 12 kilometres to the northwest of Melbourne. You can buy a 2-bedroom apartment in our project Anthem Essendon there when it comes online for about 500, early to mid 500s, but the median house price is 1.4 million.
Wow.
So the median house price nearly 3 times what you can buy a fantastic, really big 2-bedroom apartment for. So what we see when you get that really significant price gap between apartments and houses is people start to buy apartments based on affordability. So you get people that would love to buy a house in the area that end up buying an apartment because they can't afford a house.
Yeah.
And that's when the capital growth rate tracks faster for apartments, which we've seen right across Melbourne. We saw it in Richmond a few years ago, where people would have loved to have bought a house, but it was 1.3 million for very unrenovated house in Richmond. So they'd spend 750K on a great 2-bedroom apartment in one of our projects there. So we see it time and time again.
Thanks for explaining that. That's really good, and something to bear in mind when we're doing our analysis is definitely what's the rest of the supply looking like, and comparing houses versus apartments. And what you're saying, if there is catching up, then maybe when people come to me and ask me, should I be buying a house or an apartment, it's like there's not one wrong or right answer. It depends on what you're after, what you're trying to achieve. And then when we look at the high growth areas, the areas that we like the most, that's exactly the things that we should be looking. In some areas, it makes complete good sense, like a great investment to go for an apartment and not so much for a house. And that price gap is what's going to be driving the growth in the apartments. Now,
yeah, particularly if you can get a good yield as well. So if you can forecast good growth, and obviously apartments perform a lot better from a yield perspective. So if you can get a yield of 4.5+%, then you've got an investment that's hopefully neutrally geared or even potentially slightly positive, depending on your tax position. Then it's paying for itself, and you're still offering, the capital growth is the upside, which is great as well.
100%. And you just mentioned one of your projects that I really like, the Essendon project. Now, what's supply looking like in Essendon?
Non-existent is the short answer. So yes, it's a fantastic project. Anthem Essendon, we're really got a display suite that's under construction at the moment, and we'll be ready to launch this project quite soon. And it's a really unique neighbourhood. So Essendon's the most aspirational suburb within the inner north, sort of northwest of Melbourne. Median house price, as I mentioned, is 1.4 million. If you live in the surrounding area, you'll want to live in Essendon. So there's really strong demand. That's based on amazing schools. It's got probably the best service from a shopping perspective of any neighbourhood in Melbourne, really. There's amazing sort of shopping options around there. Beautiful wide tree-lined streets. It's a really elevated suburb, so it's got a great feel. And there's a lot of houses that actually sell in the sort of $5 to $10 million price range as well. So you're in really good company from a property perspective there. When a house sells around the corner for $6.5 million, that obviously has a positive impact on apartment values as well. So quite a unique neighbourhood. And then the project itself is probably the most well-rounded project we've sort of seen in the Melbourne market, and definitely we've had at Blue Earth Group. We've got an amazing range of residence facilities with this development as well. So there's beautiful private dining rooms. There's a gym that's the size of a Anytime Fitness, fully equipped with techno gym equipment. A health and wellness centre. There's golf simulators, games rooms, all sorts of things within the project that is just not normal in the market. Obviously, that really attracts this sort of lifestyle development, really attracts really great quality tenants. They pay a bit more rent. So whether it be $20, $30 or $40 a week extra, because they're not having to, they do away with their gym membership, and there's a whole range of other benefits of being in the building. So people do pay more and they stay a bit longer. And then obviously that's really beneficial from a resale perspective as well. And the beauty of it is it's all being delivered at price points that have become a thing of the past in Melbourne. So our 1-bedroom apartments there are now sort of low to mid 400s. 2-bedroom apartments start in the low 500s. They're mostly in the sort of mid to high 500s or thereabouts. And what we've found in the Melbourne market is that apartments have become a lot more expensive. So development site prices have risen by about 70% since 2015. And when developers are paying more for the sites, unfortunately, the consumer's paying more for the apartments. What's a bit unique about this site and a lot of the Blue Earth sites is the team at Blue Earth have a longer term approach to the development life cycle. So they acquired this Essendon site 6 or 7 years ago at a fraction of the value of the site today. So they've got, flexibility to be able to deliver a much better project at really competitive price points because they bought the site so long ago.
Yeah, and it's great that we start by analyzing first competitive prices and an amazing investment from a financial point of view, and then everything you mentioned that it's different about your particular developments versus what's out there. Of course, when we're looking to buy something, you want to make sure that you're buying something that your property, it's unique versus the rest out there. So if given same price point to put it out for rent, yours versus the others will always be the first choice for people. And then when you're trying to sell also, like what's the appeal of buying your own, like someone buying your property versus anything else out there. And 100% all of the different things and details that you just mentioned make that investment unique and give that extra thing on white. You want to go for something that it works from a numbers perspective and then has a difference, a point of difference of why people would choose to rent or buy your own property in the future. Now, can I ask, just to wrap up, why invest now? Why purchase now? What's the driver out there?
Yeah, it's a good question. So I've been a believer for a long time that counter-cyclical investing is the way to really make money, with investments, in particular property. And, the old famous quote from Warren Buffett, be fearful when others are greedy and greedy when others are fearful, I think definitely rings true when you look at really successful people, who have been investing forever. And that's the philosophy that the team at Blue Earth take definitely as well. So, for example, the team have bought three and almost 4 very good development sites in the last 3 weeks. This comes at a time in the market where I know a lot of the developers in Melbourne are basically sitting on their hands and they're petrified, whereas Blue Earth are really taking this opportunity to get out there, find the right sites, buy them on their terms, and that'll mean that they can obviously deliver projects at great price points in the future because they've bought at a time when other developers are not. And that's, I think, an approach that we recommend, to our investor clients as well. Some of the projects that we have available in the market now would just be sold out. They'd be gone if it wasn't for the current climate. We've got some great sort of deals on these projects as well. And I think, like we saw a real, stagnant market in the pre-election with the Banking Royal Commission in late 2018, early 2019. And the day after the federal election, the market basically boomed. And if you waited until the day after, properties were selling. There was price growth of 10% over a couple of month period here in the Melbourne market. And my friends who were thinking, geez, I've missed the market. I should have bought just before the election, which obviously hindsight's a beautiful thing. But I think we're going to have a similar scenario here where when the uncertainty's gone, that the market's actually held up pretty well. We haven't had price falls in the Melbourne market. People have just stopped putting their properties on the market. The prices haven't really come back as far as the local agents I know are saying. And, when all the uncertainty's over, we know that these projects will be sold out and some people will be saying, geez, I should have bought back then when I could have got a bit of a deal or when it was actually even available. So some other, key points is we know that there was a really good article in The Australian by Bernard Salt talking about after previous crises around the world that Australia has always performed really well from a population growth perspective. So obviously we've done really well so far throughout the COVID-19 crisis, and Australia will very much be seen as a safe haven for people to live and put their money. So I think, as soon as this is, sort of all over, population growth is going to go through the roof, and I think the market will bounce back really quickly. So who knows when it's all going to end, but I think, there's no better time than now, where there's some great opportunities in the market. And as I mentioned, this, when the market changes, it changes very fast, and people often wish they had bought a month or two before, or whenever it was.
100%. And I think all throughout this podcast, you explained very well demand and supply. And you started by explaining what was driving the demand in the population, in the employment, in the investments in infrastructure, and finishing up with why buy now. I 100% agree. It's probably a lot of people out of fear are waiting to see what happens. So you don't have as much competition, and that's the best reason to be buying right now, on top of a lot of buyers incentives in there, and you guys are giving some great buyers incentives. But that's the thing, right? So I 100% agree with everything you've just said. I want to thank you very much for your time. It was a great overview of the Melbourne market, and hope to see you around.
Great. Thanks a lot, Tiffy. Thanks for having me.
Bye-bye.
Cheers.
Amazing.